Since March 2026, India's energy supply chain has come under serious strain. The trigger is the Strait of Hormuz, one of the world's most critical oil choke points, now disrupted due to the ongoing conflict in West Asia. The impact was immediate. India's crude imports fell nearly 15% month on month. LPG imports dropped 40% and LNG shipments also declined. With supplies tightening, New Delhi is now scrambling to secure alternative sources. To fill the gap, India has increased imports from Russia. According to Kepler data, India's crude imports from Russia hit a 9-month high in March 2026, nearly 2 million barrels per day. That's a 90% jump from February and the highest level since June 2025. This surge followed a 30-day US waiver, which allowed countries to buy Russian oil already at sea despite sanctions. But the discount is gone. India used to buy Russian crude at $3 to $5 per barrel below Brent. Now it's paying the market rate and in some cases a $5 to $15 per barrel premium over Brent at delivery. The disruption in Hormuz hit India's traditional suppliers the hardest. Before the conflict, the Gulf supplied India with roughly 2.6 to 2.7 Mbpd, about half of India's total crude needs. In March, that fell to just 1.2 to 1.3 Mbpd. Five major Gulf producers, Saudi Arabia, Iraq, UAE, Qatar, and Kuwait, together supplied 2.9 Mbpd in February, covering 56% of India's imports. By March, their combined supply collapsed to 1.26 Mbpd. That's a 56% drop. The disruption was not limited to crude oil. India's gas supply also came under pressure. LNG imports from Qatar fell 92% compared to February. This was due to a force majeure declared by Qatar Energy and shipping disruptions. Now, to compensate for the LNG gaps, India increased imports from the US, Oman, Angola, and Nigeria. India is not only relying on Russia. For the first time in months, New Delhi bought crude from Ecuador, Brunei, and Gabon in March. Imports also rose from Angola, Congo, and Ghana. More changes are expected in April. Reports suggest Venezuelan crude shipments of 7 to 8 million barrels are likely to arrive. Also, there is potential for Iranian oil purchases, especially cargoes already at sea. Despite the adjustments, supply pressures remain. India's total crude imports are still 800,000 barrels per day, lower than pre-crisis levels. Refiners, however, are coping. They are using commercial inventories and output and exports remain near normal levels, but risks persist. The Bab al-Mandeb Strait, another key route, is volatile. Any disruption there could further raise shipping time and costs. Follow for more stories.